I'll be right there, class. I'm just sending everybody a template for the exercise we're doing tonight. I sent it too late, but at least you'll have it. If not now, later. Okay, scholars, let me just make sure I get everybody in the meeting. There's one person in the waiting room. Let me just get them in. Okay, well, tonight, does everyone hear me? Okay, am I talking too loud? Should I whisper a little bit? Should I tone it down a little bit? Okay.
No, it's
So
fine.
good, I don't want to hurt anybody's ears. So tonight, I'm going to go over chapter 7, and then we're going to talk about what it's about, and then we're going to do an exercise that is very similar to the exercise you'll be doing with PQ7. This way, when you go to do PQ7, you'll understand how to approach it and not be taken aback. I'm just correcting a spelling error I just saw. Okay. I feel like there's still somebody in the waiting room. Every time I let somebody in, there's another person. All right. Okay. So let's take a look. I'm gonna share. I've made some notes. You can follow along in your textbook, which is fine. And this chapter is about budgeting. Budgeting is not about actual numbers. Budgeting is about projecting what you expect will happen. Let me see what Alexa says about what is a budget. Alexa, what's a budget?
According to the American Heritage Dictionary, the budgets, which are formed by the group
Alexa, what is a budget?
as a noun, budget can have a few meanings. 1, an estimate, often itemized, of expected income and expense for a given period.
Okay. Okay, so even Alexa, thank you. She gets, oh, all right, she gets carried away. She just goes on and on. So anyway, she thought I said buttocks, so I had to stop her. I said budget, but I mispronounced it. She got all confused. I got Google in the bedroom. I like Google better. Google seems to understand my New York accent, but Alexa, she seems to have a problem with me. So anyway, a budget is an estimate of income and expenses. So it's not about actual numbers, because the decisions, as I explained in managerial accounting, need to be made before the actual numbers roll in, because by then it's too late. They want to just come up with a budget so they can make decisions based on what they think is going to happen. And how do they do that? Well, maybe they look at last year's numbers. Maybe they look at a new product that's doing very well and up the numbers on the sales a little bit. They have all these things they take into consideration when they're forming these budgets on these big Excel spreadsheets. So one of the objectives, like your chapters in this book, they always have objectives in the chapter. Let me go to chapter 7. I can't believe I want to say after this chapter, we're kind of more than halfway done. Because I think I'm pretty sure we only have 13 chapters, I think. Yeah, I think we only do 13 chapters. So after this chapter, we're more than halfway done. That's good. So let me just get to the front of the page. So this chapter is on page, it starts on page 316. So objective 1, they describe budgeting, its objectives, and its impact. So the objectives are to establish specific goals. if your parents are taking you on a vacation, you and your brothers and sisters, I mean, nobody's going on vacation this year or last year, but if they were, they would have to write down what they planned on doing, how much money they have to spend, how many days do they have, where are they going to, where are you all going to sleep? These are all the specific goals they would have to write down so that there would be no surprises. Although there are parents who just wing it, but I don't think, I personally don't care for that kind of parenting style. If I was their child, I would be very anxious in the back seat. I want to know where we're going and when we're going. So now executing plans to achieve goals and periodically checking in to see if we're on track. Are we actually getting the results that we thought we would? So this is what I want you to understand, that a budget is an estimate. Even Alexa says that. So here are some of the things on page 316. Some of the objectives of budgeting is planning, directing, and controlling. Planning what? Planning involves setting goals to guide decisions and help motivate employees. The planning process often identifies where operations can be improved. Directing involves decisions and actions to achieve these goals. A budgetary unit of a company is called a responsibility center. So there's different responsibility centers, because if something goes wrong, they want to be able to pin the blame on somebody. So they create these responsibility centers, which is basically tag you're it if there's a problem. So each responsibility center is led by a manager who has the authority and the responsibility for achieving the center's budgeted goals. And if he doesn't do a good job, upper management knows who to seek out and find out what the heck happens, and they'll want an explanation. So controlling involves comparing actual performance against these budgeted or estimated goals, such as comparisons that provide feedback to managers and employees about their performance. If necessary, responsibility centers can use such feedback to adjust their activities in the future. So that's like an overview. So I want to introduce you to what's on page 319. And please, if I'm talking too fast, slow me down. I'm consciously trying to talk at a slower pace. In New York, we are not allowed to be slow, but I'm in Florida now. I'm going to do as the natives. I'm going to slow it down. So a static budget shows the expected results of a responsibility center. Remember that one manager that's responsible for only one activity. And there's an example of this static budget on page 319. But hang on, I actually scanned so you could see what a static budget looks like. The more I teach these Zoom classes, the more ideas I come up with and try to make it better for all of you. I'm trying. So let me find that. Okay, so we said static budget. Let me just open them up. I have to open them first, and then I have to minimize them, and then I have to share them. It's a process, but a minute is precious when we're doing this Zoom class. But at the same time, I don't want to really rush any of you through this. So let me go back to sharing. New share.
Hey, I don't know if it's my computer, but you are breaking up.
Oh, okay. Let me see. Maybe, you know what? I'm going to go get my headphones. Let me go get my headphones.
Maybe it's just my computer. So class, is it me?
I think so. Because I can hear.
Okay, you know what? You know,
Okay.
there's only one way to find out. Let me put my headphones on. Let's see if that helps everybody. Hang on while I plug them in. Okay, I got it. Okay.
Just to let you know, like,
How's that sound? Can you hear the head? Does that sound a little bit better? Does that sound better?
I
Okay.
Real
All
good
right, all right,
now.
so we'll use the headphones. So I'm gonna share.
Not just me.
Now somebody can't hear? Does everybody hear me still? So I'm gonna
I can,
share. All right, I'm so glad. Was that you, Carla?
it's me, Carla, and then
Oh,
we're still on static budget. That's where
you
we're
still
at.
cannot.
No, no, that's where we're at. That's where you explained that we're gonna get to the static budget and we're gonna go through the whole.
Yeah. That's what we're gonna do. I just want to make sure that you can hear me properly. So let me come and find
I'm here, so maybe somebody else wants to say something or
Oh.
not, not sure.
Hold on. Actually, I'm not talking at this moment, but just
Hear
bear
you
with me.
good now. It was me that.
Let's look at the flexible budget. For some reason, I can't find the static budget. So here's the flexible budget. We're going to look at the static budget, but the next thing we're going to talk about is a flexible budget. Unlike the static budget, the flexible budget shows the expected results of a responsibility center for several activity levels. So here's a level 1 activity. They made 8,000 units. Of, let's say they made, I don't know, what could they have made? Let's say they made headsets like I'm wearing. And then in level 2, what happens if they make 9,000 headsets? What happens if they make 10,000 headsets? So a flexible budget is in effect a series of static budgets for different levels of activity, because a static budget only has one level activity. It wouldn't have these 3 columns. It would just have one column. So let me go and see if I can find the static budget. Do you see that now? Do you see the static budget? Or you still see the flexible?
I see it. I don't know.
Wait, let me see. Do you see static budget? And by the way, this is on the RA, question 4. A
Yes, I
static
see it.
budget. Oh, thank you so much. Thank you. So a static, this is where I miss having face-to-face with all of you. It's just really rough for you and for me. So a static budget shows the expected results of a responsibility center for only one activity level. Hence, that's why you only have one column. So you have direct labor, electric power, supervisor salary. So the total department cost for the assembly department, they're coming up with 60,000. Notice all the zeros. Why? Because these are actual numbers. These are estimates. They don't put in 40,000 and $1. They're going to round it up to the nearest thousand. So because it's a budget, it's a static budget. So then it says static budgeting is used by many service companies and governmental entities, and for some functions of manufacturing companies, such as purchasing, engineering, and accounting. The disadvantage of budgets, a static budget, is that they do not adjust for changes in activity levels. So let's talk about this example, why it matters. So in the film industry, I happen to love watching movies. I just saw that Greenland movie. It was okay. I like that Gerard Butler. I think he's handsome. I don't care about the story plot. I just want to watch him walking around. That's enough for me. So anyway, so service businesses like film, I'm not dead yet. I'm not in the grave yet. I'm still, even though I'm old, I still know something that's beautiful to look at. So film budgeting, service businesses like film and entertainment use budgets as a roadmap to control expenses. In film production, the budget is a valuable tool to manage the tension between creative expression and cost. So in other words, you got Spielberg, he created this scary movie, and he wants to have the clown and the sewer, and he wants this and he wants that. And then you got the accountant saying, wait a minute, how much are we exactly spending on this movie? So you got the creative having a tug of war with the accountants or the cost people. So the film budget is a static budget that can be divided into 3 major categories. So static budget, one level of activity. You're making one movie. So you have above the line is one category, below the line, and post-production costs, after the production costs. The above line costs include costs attributed to creative talent, such as the lead cast and the director's salary, the script fees. Below the line is location, costume, prop rentals. Oh, 1 second, I have to plug in my computer. Bear with me. I completely forgot. The most important thing I'm supposed to do is plug in the computer. Oh, hold on, everybody. Just read that while I'm gone. Just read that blurb and I'll be right back. Let me go find my plug. Okay, I'm coming. I found the plug. I'm just plugging it in the wall. Now I'm plugging it in the computer. I'm almost there. Okay, we're good. We're good to go. Get my headset back on again. All right, so that's a real life example about budgeting, and then they use a static budget. All right, so let's go back to what we were talking about. Let me do a new share. And I wanted to go back to the lecture that we started looking at. I'm just going over terms that you're going to see in the chapter, but I thought they were important things because they give you different types of budgets. So we have the static budget, one level of activity, the flexible budget, more than one level of activity. And then we have something called the master budget. And the master budget basically shows all the different budgets we're going to put together. It's almost like the master plan, so to speak. You're going to have the sales budget, you're going to have the production budget, the direct labor budget, all these budgets. The master budget is kind of just like when you have your book. At the beginning of the book, what do you see at the beginning of your textbook? The one that's, my book is all ripping apart because this paper is so thin. It has all the chat. What Carla, what do you see?
Everything that we're supposed to, right?
Yeah, you see, you're right, Carla. You see all the chapters. Yeah, you see all the chapters and the pages. So that's like a master, summary of what's in the book. And this is the same thing.
Master plan.
Yeah, the master plan. So the master budget is the same thing. It's
Okay.
an integrated set of operating. And if you look on page 322, if you happen to have your book, you'll see like a little pie. They have it like looks like an organizational chart. And at the top, they do the sales budget because that's the first thing that mostly they prepare. Once they do the sales budget, once they project how much the revenue is going to be, then they kind of know how much money they have to spend. Anybody can create all these expenses because people can spend and spend and spend. But if you create the sales budget, then you kind of know where your guidelines are. How many tickets are we going to sell to this movie? How much are we going to make on this movie before we start spending money? So that's on page 322. Then we have what's called a sales budget. And this is the most important piece. Now, as I said, the sales budget is under the umbrella of the master budget. It's one of the things in the master budget. I'll read to you what's in the master budget.
Can I ask a question?
Yeah, of course you can. Of course you can.
Okay.
Yes, please.
Okay, so we're at the master budget. So we meaning
The managerial accountants.
Yes, we're the ones determining this.
Yes, we're the ones putting it together. But according to the book, it gives you like a rough idea. Like there's what they call operating budgets. So one of the budgets is a sales budget. I'm looking at page 322.
Okay, I'm there.
Yeah, and another is I'm on the very bottom, exhibit 7. One is a cost of goods sold budget, which includes a production budget, direct materials purchase budget, direct labor budget, factory overhead budget, and of course, selling and administrative expense budget. Those are all go under the master budget and also are part of the income statement, Then you have these two other budgets, we call them financial budgets, called a cash budget and a capital expenditure budget. Those are under the balance sheet Because a capital expenditure could be something like a building, and that's gonna last for a long time. That's a long-term asset.
Building taxes,
Well, that would go under selling and administrative expense, I believe.
so at one
Yeah.
point in time, like when does that get determined? Like, is it us, meaning
But
management?
meaning accountants, well, I guess they would look at what they paid last year. And then
Okay.
they would, I'm guessing that it would be under the selling and administrative expense budget, where you have the
So it
accountant's
could
salary.
fluctuate,
It
right?
could fluctuate, but they might look at the last 2 years and say, okay, this is what we paid last year. This is what we paid the year before. Let's estimate that our
Okay.
taxes are this year. They're gonna estimate by looking back a couple of years. And that's what they'll do. They can't look in the crystal ball in the future. They would do that if they could. But what they can do is look in the rearview mirror of what happened. And then they'll look at the conditions, like right now with the COVID. These are very unusual conditions and sales are down. So they might have to look at that when they prepare their sales budget and say, well, with the COVID and people are hurting and people lost their jobs, our sales may be down 20%. They might have to look at that. So
Okay.
that's what's going on. Good questions, Carla. So
Thank
now
you.
you're so
I'm just
welcome.
trying to
No, you're trying to
determine,
envision it. You're trying to envision it.
like
Exactly.
in real life, it's because it has to be
Well, I
real.
mean, think about your own household. The
Oh,
equivalent, think of an equivalent of a sales budget would be, you would, if you were married, let's say, and you have a husband. I mean, I'm by myself here with my dog Toby, and he doesn't go to work, so it's just me earning the money. So the thing, and he's spending the money, but the thing is that I would say, okay, what's my revenue coming in? Well, I know I'm making a salary from Pasco Hernando State College. I'm a part-time adjunct, so I'm not a full-time. I also collect Social Security, and I also have a small pension from my job in New York. So I would add all that together, and that would become part of my budget, because I know I'm always going to get the pension. Well, who knows nowadays, and nothing's in stone. But let's say I'm always going to get the pension, always going to get the Social Security. I don't know about the job with Pasco, meaning Pasco Hernando State College, but I've been teaching for the past 4 years, so it looks pretty promising that they'll continue to assign classes to me. So, but
okay.
that would be an iffy thing. If I
It's
wanted to be really, if I wanted to be conservative, I might even leave that off the sales budget and say, I don't know if they're going to call me back next year, because of COVID, students are not enrolled as much. And as an adjunct, I would be the last person to get a class, because
Okay.
the tenured professors would get them before I do.
Of
So,
course, I
yeah, so these are the things. Or maybe I'd put half the income, because maybe instead of getting 3 classes, maybe they're only going to give me 1 class. So these are the things that a manager has to think about. They can't just live in a bubble. They can't
would
just
you
live in a
consider that
bubble.
a projection, right? A
Yes,
projection.
but they have to look outside,
Not
Carla.
set in stone.
They got to look at the outside world. They can't live in a vacuum or a bubble. They have to say, well, what's happening in the outside world? Well, the COVID's happening, and we just got a new president that's happening. So how does that affect our sales? They have to look at that as well. They have to look at that as well. And when they're trying to determine what the sales will be for the projection. So then we have a production budget, which again, if you look on page 322, is under the master budget. These are all under the master budget. And this should be integrated with sales to ensure that the production and sales are kept in balance. So once you figure out what your sales budget is, you would line up the production budget based on the sales number. So if production costs are 50% of sales, then you would look at the relationship and determine the amounts based on the relationship that sales and production has. Then we have the direct labor and cost budget. So the estimates of the direct labor hours and related costs need to be supported. And also, I mean, I'm not sure. I think it got put into law. Now the new
I have a
minimum
silly
wage is,
question.
yeah.
Is there and maybe I'm just, I don't know, just thinking out loud. Is there like a percentage with operating budgets, with financial budgets? Is there a percentage, or there's no
It's
revenue?
just, it's estimates and it, and
Just
they
a math.
could, it's estimates, but they could be Paula, they could be basing it on percentages. Or they could just look at, what they could do is look at last year's numbers and up them by 10%. You know, it all depends on the managers, what they want to do. I mean, I think that now, I think they signed in that the minimum wage is $15 an hour now. I'm not sure. But I mean,
think it's been
it's
in the process or
in
in
the
the
process.
work.
So as a manager of McDonald's, when they go to do the direct labor and cost budget, they're going to have to take into account this new law that's come into effect. Because they're going to have to change their estimates to reflect that new rate of pay for minimum wage. So this is why you have to look at the outside world, look at what happened last year in your company, and that's how you come up with these budgets. Then we have the selling and administrative budget, which I think would include, I believe would include income taxes, as you mentioned before. And the sales budget, again, is used as the starting point. So if this is the revenue I'm making, I'm going to make $1 million in sales. So how much am I going to spend in selling and administrative expenses? How much in production? It depends. What am I producing? How many people do I need to produce what I want to produce for these sales? All this has to be determined. And the sales budget is often used as the starting point. So you always want to start by doing the sales budget first as a manager. So if you went on a job interview and you were going for a managerial position, maybe the person interviewing you might say, Benea, if you're the manager of this department, what budget would you prepare first? And you would think, wait a minute, we went over chapter 7, and you would tell the interviewer, well, I would prepare the sales budget first, because the sales budget is often the starting point for any other budgets that I have to prepare within my job description. And the interview would be very impressed, because that's a logical, that's a kind of an answer that a scholar would give. And that's the kind of an answer that would get you a job. So now I'm going to stop with the talking because I'm giving myself a headache. And we're going to.
No, it's a good explanation. And like in
Oh,
real life.
I'm glad. I'm so glad. You guys are so,
No,
you're so good for my ego. I'm having so many.
No.
Thank you.
I'm sorry, maybe I'm talking out
No,
loud.
I love to see all of you. Angela, you're quiet tonight.
You keep reading all of this, right?
Yeah.
And then you're trying to like.
I am. It's not easy. This is not an easy subject.
How does this apply in real life? And
No,
just
no,
like you.
Yes.
Example. Okay, McDonald's, $15 an hour. Like who's what's gonna happen?
Exactly. But the thing is,
So it
Paula.
Makes sense. Then just like I'm flipping pages.
No, but see, Paula, this is a specialized field. This is cost accounting. We used to call it cost accounting. They call it managerial. This means that you may never, like when I worked as an accountant, I never really did manufacturing companies. This is a specialized field. You might not see this depending on what job you get. So this is a specialization. In other words, you're not going to go to a foot doctor if you have a heart condition, because he specializes in feet, not in the heart. But with cost accounting, that type of accountant specializes in analysis, budget reports. So accountants specialize just like doctors. So this is a specialty, this cost accounting. I talked to my old boss when I was your age. I worked for this man. I still keep in touch with him. He's a partner of a firm, but he's still working. And he says, so what are you teaching this year? I says, I'm teaching cost accounting. He goes, oh God, don't talk to me about cost. Even he's a partner of accounting firm. He's like, oh, I don't want to hear about cost accounting. So cost accounting is a rough subject. It's complicated with the factory overhead and all that. But it's a specialization in accounting. It's companies that manufacture their own goods and factory overhead. Most of the times when I was working, I was dealing with service companies, and it was different than a manufacturing company, not as complicated. But tonight, I want to go over this exercise 7-8. I sent you the template via the email. You don't have to open it now. We're going to do it because you have, I believe 719 is the one you're doing, which is exactly the same type of problem. So if you could do this one, you should be able to do your PQ7. So let's take a look at this. The name of the company, I believe, is Pet Supplies, sort of like a Petco. And it's on page 352. Let me just turn the book here to 352. Okay. Yeah, it's 352, and it's called Pet Supplies, Pet Place Supplies, Inc. So it has a show me video. Let me see if I can pull up the show me video, and let me make sure that I admitted everybody. Okay, everybody's in. All right, good. We only have 10 people tonight, but that's okay. That's good. So I'm going to attempt, so for a minute, you're not going to see what I'm seeing, but I'm going to attempt to look up the video, and then I'm going to do the problem with you. And before you know it, it'll time to say goodbye. So let's see. We should have like a goodbye song that we sing. All right, so .com. All right, so you go to Cengage. I know I've told you this so many times, but I like to tell you over and over again because I want you to know how to access it yourself when I'm not around. So let's see. I guess it's here. All right, so the fellow, so then you log in. There's the guy with the yellow sweater playing with his phone. So you log in. Let me just move everybody over to the side so I can see what I'm doing. Let's see. My dashboard, I guess.
You
Okay.
still can't see what you're doing.
Yeah, we still
Let me,
don't know.
no, I know. I got to share. I'm going to share right now. I'm
Okay,
just
all right.
doing that. The problem is I'm trying to know where to go for, I'm going to do students because that's you. You would go to the students thing. So I clicked on students and it should, no, this is not good. I want to get to that screen we always go to, getting started. Maybe that's it. I don't know. Every time I come on here, I think I know what I'm doing and I don't. All right, this is not the right place. Let's see. Let's try Explore Cengage. Let's see what happens with that. They must have updated it. Oh, let me start my video so I can see, so you guys can see me. All right, take a tour. No, I don't want to take a tour. I just want to
Professor, just go through the same way that you normally do.
Yeah, I
because
thought I
when
did. I know.
And when I
thought
go back, and then I just like follow the same steps, and I wound up in the same
same place.
page.
All right,
Yes.
let me try that. Let me close this down. Let's get this
The
closed down.
same way that you start from the beginning as no
As
student.
if I'm
no
signing in. Okay.
Mhm.
No, you're right. Let me go
And then
to,
once you do that, I follow the same steps,
then you
I
get,
wound up on the same page. It's just
yeah, sometimes
my
I have
experience.
trouble. I do have trouble. Okay. Let me do, let me just get, share this so you can see where I'm at. See, the problem is I think I'm signed in already. So maybe I'll sign out and sign back in again. Let's try that.
Well, if you just click on your dashboard, the book
Dashboard,
will
yeah.
show up on your dashboard.
Let's see. I forgot where I click. Oh, I think it's this one. Oh, for goodness sakes. Browse the materials. I think it's this. Click one of these buttons. That's right. I think that's what took us. Search catalog. No, it's different.
Go
Browse by,
to your sign-in menu again,
Yeah.
Mr. Feo.
yeah.
then
What do you say?
Where you see my dashboard, because you said you were signed in, click on my dashboard. That will take you
Yes.
to where you are.
And now all of a sudden, I don't know what's happening. It's loading now. I think I signed myself out.
Yeah, you're gonna have to sign back in and then go to your
Yeah,
dashboard.
let's do that. Let's do that again. Let's try again. I'm trying to rush myself and I never do good when I rush. So let's do this. We have time, but I don't want to waste time. First, let the screen come up. Okay, so I'm gonna do a new share. And then you said I have to sign in because I am signed out. And then it's loading. Okay. Oh, there we go. Thank you, Carla. I got to where I wanted to be. Thank you. So now, again, this is where you go to the show me. You have to click on this send gauge now. But before you do that, make sure the book is right. The book is right. Click on the send gauge now V2. And then it takes you to, it loads up. Let me see. Can you see the word loading top?
Yes.
Is everyone? Oh, good.
Yes. Yes.
Yeah, my computer's slow. I don't know what's happening. I need a new computer. My desktop is okay, but my laptop it's on its last legs, unfortunately. So let's see. Now, of course, I don't recognize this. Okay. The free
Just
class. This I never seen this before. This is new. I still do
Yeah.
continue. Continue. Oh, here we go. This I see. All right. Study tools. Study tools. And then we want to go to, we got the right book. We go to adaptive study plans. And then we go to chapter 7, budgeting. I never looked at this chapter because you'll see it says start studying. And I'm going to say, okay, let's get started. So I think if you have time, take the quizzes, but if not, just say you're done and then say, yes, I'm done. So yeah, I'm done. I haven't answered a single question. So what did I get? I got a 0 score. So therefore I want to improve my score. And here's where it comes up with where you could improve your score. So I'm looking for the one about preparing cash. Let's see, master budget, basic elements. Let's see, maybe we could look at the one about the master budget. That might be a good thing to look at. Prepare financial budgets. This is the one we want to look at too, but let's see if there's something about master budgets. Let's look at this one. This talks about a master budget. Hold on, I'm going to get it started.
Mr. Feo, can you put the caption on? It's still,
Yeah, of
I
course.
can't hear them. Thank you.
Oh, you're so welcome. So you see how they're all interrelated. You do the sales, then you do the other ones, and then when you do those, let's look at that again. It was quick. It was only a minute. Let's watch it again.
Danny, can you type again, please?
Yeah, that was good. That was very helpful. I want to do one more. Now, let me just see if I can get back there without closing myself completely out. Let me just move you guys here. I'm doing the back button. I want to go and do the financial budget because that's the one that's PQ7. So get more help. And let's see, let me move. I got things on the screen. That's why I get confused. So this is the one we're doing, the schedule of cash collections of accounts receivable. Because when you have a sale, it's debit to accounts receivable and asset and credit to sales. There's no cash. You didn't get the cash yet. You got to collect that. So let's see what happens here. Let's see, where is it? Where is it coming? Is it here? Oh, it's working. Just give it a second.
Wait, can you
Still
just
twirling.
repeat that one more time? It's debit to AR? Is that right?
Not working. Come on, baby. Yeah, you see something twirling in the middle? You see the
Yes.
circle twirling? Yeah, it's
Yes.
buffering.
But
It's,
but my
it's all
question
right.
is-
Oh, here we go. Here we go.
So the question is, it's gonna be a debit to AR, but I'm not gonna get credit to cash, right? That's a little, I'm a little confused. Sorry.
Ms. DeFeo, we can't hear audio.
Oh, you can't hear audio? Okay, okay.
And then Carlo had a question.
All right, hang on. Let me see if I can stop it. I wonder why we can't hear the audio. All right, thank you for telling me.
Okay.
Just bear with
my
me.
question-
I'm trying to stop it. Okay, I think I paused it. Okay. So let me close out of here. So this is the one we're actually going to be doing. So let's see. Why isn't the audio? Maybe that was why it was buffering. Okay. Can
Oh,
you
wait,
can you
can
see the screen that's in front of you? It says schedule of cash collections. Could everybody take a clean piece of paper before I answer any more questions and just write this piece here on your clean piece of paper?
Yes, I can see the screen, but
Okay.
I'm going back to my first question. Can I?
Well, can we just like hold off your questions,
Okay.
Paula, because it might get answered once we do this exercise. So just fill this on a blank piece of paper because we only have 16 more minutes to go, believe it or not. And I'm going to go through this problem with you and then I'll answer questions at the end, I promise. If you have a question that you are concerned about, type it in the chat box and I will email you if I have to. I mean, if I run out of time. Someone raise your hand so I know you've written that so I can move on.
Yes.
Okay, good. Everybody's got that written down. Good. All right, so let me pull up the sheet because we're going to do it together. And that's important because I want you to know what you're doing when you go to do the exercise. Let me just find the right. Hang on. Do you see anything on the screen at all?
The video
I'm
paused
hoping
where you had
don't,
it paused.
actually. Oh, good. I'm glad. Because I don't want you to see what I'm doing. I'm gonna share the screen, but I just need to get through this first, and then because I don't want you to see, we're gonna work on it together. Okay, hang on. Just bear with me. I'm just removing numbers before I come back to you. Okay. Delete. Almost there. Just a couple more. Okay, one more. Okay, we're going to do a new share. And this is the one we're working on. The pet supplies, pet place supplies. Does everyone see the Cengage light green template? You all see
Yes.
that?
Yes.
Oh, good, good. Everyone sees it? Is it big enough for everybody? I don't know if I
Yes.
could. Let me see if I can make it bigger.
Yes.
Okay, good, good. So they tell us in the problem, if you look on page of your book, 352, they tell us that the sales, the projected monthly sales, here's the projection, meaning a budget, for May are 134,000, 155,000 for July, and 169,000 for July. I said July twice, but I meant June and July. So now here's May, here's June, and here's July on this schedule of collection from sales for the 3 months ending July 31. 1, 2, 3 months. So they tell us, I'm going to read it to you what the problem says. It says that all sales are on account. That means nobody paid cash, meaning the customers. They charged it. And they say that 65% of the sales are collected in the month of the sale. So if it's a May sale, they're going to collect 65% in May. The next month, which will be June, they're going to collect another 30%. And then in the following months, they're going to collect the remainder, which is only 5%, because all sales are on account. %65 of sales are expected to be collected in the month of the sale. So in May, what would be collected in May? What percentage? Either type it in the chat box or you could say it out loud.
You said 65%.
65.
Yeah, 65%. That's right. That's right. So in the month of May, they're going to collect 65%. In the month of June, the same month, what are they going to collect in the month of June?
I think you said 35%.
30.
I don't.
No,
30,
you're in
okay.
June now. We're in the next month. In June, what do we collect in the same month, which is June?
65%.
Yeah, exactly. And then we're in July. What do we collect in the same month, which is July?
65%.
Yeah, 65, good. So now they tell us in the second month, they're expected to, in the following month, after May, they're going to collect 30%. So what are they collecting in June, if that's the following month?
We're gonna go back to 30% of the
30%, 30%. And then what are you going to collect in June? The following month is July. What are you collecting in the following month of June?
Same thing.
Yeah, 30. And then here we have what are we going to collect after this
The-
first and second month? How much is left? If this has got to equal 100, if this equals 100%, what is left?
5.
Yeah, 5, exactly, Angela. All right, so these are all the percentages based on the story they told us. Now, what are the credit sales?
Okay, so then we have to go back to the amount that we
For May, this is May. Don't look at these.
Mhm.
They're up here. They're right up here. What are the May sales?
134,
May sales on account.
134,000.
What does it say up here? Where's May? These are the projected monthly sales. Don't look at this stuff here, but what's the credit sales for May? It's one of these
Oh.
numbers. Which one says May?
Okay.
How much? And you could type it in the box. May sales on account. May sales, June sales, July sales.
May 134,000.
It's 65% of 100, maybe.
Well, the whole total sales is 134,000 for
Right.
May.
May sales on account. That's the
Anybody else? I can only see Benea, Angela, and Carla. Who else is behind? Who else? Let me see who else I can pick on.
The credit
Maya?
sales,
Credit
Ms.
is
DeFeo.
35%.
Can you hear me, Ms. DeFeo?
I think we losing.
Can you hear me at all?
What are the Yeah,
Okay, it's 134,000 is the credit
Yeah.
sales for May.
yeah, exactly. And guess what? I don't know. I gotta make
So
this
we-
thing bigger because for some reason it's, can you see it? It's like it's yeah, it's too big. I gotta make it smaller. I don't know why. Can you see those?
I can see it. It looks good.
But I thought I said that, or maybe I was.
I don't think she can hear everything that's being said.
Oh, okay,
Else.
because now I'm getting confused because I'm like, I thought I
Why?
said 134,000. Because I thought I said from the
Yeah,
beginning.
134,000.
Right, and I thought I said that from the beginning, and then I got myself all confused because I was like, I thought that was the right number. If I'm following, it's
The
You were
June-
right, you were right. She didn't hear us.
I don't hear you guys. That's why I say type it in the chat box because I can see.
okay.
Sometimes I can't hear you. There's too much. I'm hearing noise from your homes as well. Dylan, what do you think is the sales for June? Dylan,
You
Dylan, are
shared
you
your,
there? I don't know. I think he's left the neighborhood.
you
Dylan, are you
unshared the
there? Can you
screen.
hear me? Dylan Larriman? Did I?
He's here. He's in the chat box.
Oh, he's in the chat box. Okay.
Yeah. But you
Okay,
stopped sharing the screen on accident if you want
So
to start.
Dylan, type in the chat box what you think is the June sales. Yeah, let me see. I've got to look now. My screen's oh, right. Yeah. No, that's May. What's June? What does it say up here? Can everybody see? Is it too tiny? You gave me May. What's June? Can you see June? Yes. So June is 155. 155. So then what is July? I can see. Because when I hear you talking, I don't really know who's talking. It's good when you type it in the box. Okay, Dylan, 169. It says my internet's unstable today. I don't know what that means. Something's happening. All right, so now we did all the work. So now we just have to multiply it out. So equal plus 134 times 65%. We collected that in May. Then in the following month, we collected 30% of 134,000. And then in the month after that, we only collected 5% of 134,000. And if you add these three numbers together, what do you think you'll get? You get 134,000, 87,100 plus 4,200 plus 6,700 equals this number here. So here, 155,000 times 65%. So we have 107.50. And then the following month, it's 30% times 169. And last but not least, we have July, 65% times 169. Wait, I'm sorry, let me put the wrong. And so now what do you have to do next? You just have to add. So this becomes this number, there's nothing else. So in May, the schedule of collection, they're going to collect 87,100. And in June, they're going to collect 40,200 from the May sales and 100,750 from the June sales. And then here, they're collecting 6,700 from May, plus 46,500 from June, and plus 109,850 from the July sales. So here's your answers. Let's look at the top and see if we got 100. We got 100. This is what you're going to be doing for PQ7. All right. All right. Ready for your questions now. I'm ready for your questions, but it helps if you type it in the chat box because then I can read it and clearly understand what you're asking me. Benaya, does anybody have a question? For some reason, I don't see anything in the chat box. Everyone in meeting, okay. I'll just put type your questions. I think you'll be fine with this. This one is not bad. It looks more complicated. You just have to put the right sales in.
And you said this is the same format that we'll be using for our PQ do?
Well, I would think it is, because to tell you the truth, if you look at the PQ7, it's the problem right underneath it. It's a scheduled cash collection, it's the same thing. And they give you the 3 sales, October, November, and December. Just read through it carefully. They even give you the answer for the total of October. So they give you one of these, as an answer. And the answer is 62,550. Is somebody crying? Is there someone crying? Is everybody okay? I hear someone sobbing.
I do.
Is everyone all right? Okay, don't cry. There's no crying in accounting. No crying in accounting. Seems easy enough. I have no questions. Oh, good, Brian. Oh, Brian says he's okay. Good, Brian. Adios.
Yeah, this one's pretty simplex compared to past ones.
Yeah, budgets are not bad. And these are things that you would use in your own life, budgets. So, all right, you can always email me. Carla, did you have one last question to ask me? Did this make sense now that we went through the problem? You're okay? Does everyone see how this section is just May and this section is June and this section is July? Because when you saw this here, you attempted to put the May here and the 155 here and the 169 here. No, this is just May. This is just June. This is just July. So be careful. I see how it should be done now. Doing the problem helps out. Oh, good. Dylan, thank you.
So my question is, okay, so I guess my question is, okay, so when we're doing this, I mean, should I expect that the percentage, I'm just gonna populate the number?
No,
or I
because
should
you got,
just
well,
do
there's
it-
no template for your PQ.
Okay,
And let's see
Okay.
what it says. Oh my God, I almost lost my book. This book is so heavy. I'm gonna break it up into different binders. It's too, if you want to leave, you're welcome to leave. If you want to stay, you're welcome to stay. So in this problem, Office Mart has cash and carry. And they tell us that Office Mart estimates that 25% of monthly sales are to cash customers. So some of the sales are cash, 25%. The remaining sales are credit sales. So you have to extrapolate the cash sales out of the numbers they gave you by
so I'm
taking out
gonna populate
25%.
my own
Then they
number
tell you,
from, right?
Yeah. yeah. So what I would do is make an Excel spreadsheet like this one here,
Mhm.
and then
And you populate my own
I
number.
guess you could use this sheet. The only problem is it's going to come up with the wrong answers and it's going to give you a 0. But this is the format you want to use: the credit sales, the percentage, and you're going to have here October, November, and December instead of May, June, July. And then instead of having 65%, you're going to have 30% on the first, 30% here, 30% here, 30% here. And then it says, while the remaining 70% pay their account in the following month. So you're gonna have 30% here and 70. You're not gonna have a third box. They have 2
Okay.
months. They're gonna have 30 and 70, 30 and 70 and 70.
I
No,
see
30,
that.
excuse me. 30, 30, 30, 70, 70, 70. So it's the same format, but different amounts. The accounts receivable balance on September 30th was 35,000. Prepare a schedule of cash collections for sales for October, November, and December. So yes, you can use the same format. Just make sure you use the right percentages because it's a different problem. All
Okay.
right, scholars, you're good to go?
Olivia, thank you.
Thank you.
So welcome. I'm just gonna put
Thank
good
you.
night. Good night, everyone. Have
Thank
a
you.
wonderful
Have a
night.
good
Go eat
night.
something good. Good night. Have something good to eat.
See you Wednesday.
See you Wednesday. Bye-bye.